This is the Asia Trade. I'm Shery in Tokyo.
I'm Haidi Stroud-Watts in Sydney. The top stories this hour: investors digesting yet more tariff threats from President Trump, who's now flagging a 200% levy on pharmaceuticals and 50% on copper, sending the metal to a record high in New York. The president also ruling out extensions on his country-specific tariffs, walking back on earlier remark that the August 1 deadline was not 100% firm.
And I'm Min Lo in Kuala Lumpur, where the U.S. Secretary of State will attend this week's ASEAN meetings. Marco Rubio's focus on security issues in China set to be overshadowed by President Trump's latest tariff threats.
And those tariff threats really being felt across markets. Take a look at how U.S. futures are setting up. And this, of course, after very little change in the overnight session, still near record highs. Of course, we're watching that commodity space very closely as copper prices soared in the New York session on those threats of 50% tariffs. We also have oil right now under a little bit of pressure, but they gained in the overnight session. We continue to see those tensions in the Middle East, not to mention the WTI prices just briefly topped their 200-day moving average, propelling prices higher. But this week, it will be really about sovereign debt auctions around the world. We had a 5-year auction, a 3-year auction in the U.S., which was pretty soft. We're still headed for the 10-year and 30-year auctions. Of course, investors have been paring back bets of more Fed rate cuts this year, given, of course, more solid and resilient labor numbers recently. But we have seen, of course, that volatility in the Treasury space continue, and we're talking about the 30-year yield actually approaching that 5% level. We are also watching an auction here in Japan. The 20-year auction is happening on Thursday. We already had a soft 5-year auction. That, of course, will be consequential for the JGB markets. If you turn the board, you can actually see some of those moves that we're seeing in the Asian session, because Nikkei futures are not doing much right now, but we've been watching, of course, the Japanese yen very closely. We're also watching the offshore yuan. Not a lot of movement lately, given, of course, that we continue to watch the trade negotiations, but inflation data will be one thing that we'll be watching. We saw a lot of movement when it came to bond yields in Australia, the Aussie also being propelled higher because of that surprise rate hold by the RBA, Haidi.
Yeah, take a look at what we're watching when it comes to commodities, though, because metals, copper futures are really in focus, surging to a record in New York after President Trump said that he's planning a 50% tariff on imports. It's a move that could trigger massive supply chain effects throughout global metals markets. He's also flagging a levy as high as 200% when it comes to pharmaceuticals.
I believe the tariff on copper, we're going to make it 50%. We'll be announcing something very soon on pharmaceuticals. We're going to give people about a year and a half to come in, and after that, they're going to be tariffed if they have to bring the pharmaceuticals into the country, the drugs and other things into the country. They're going to be tariffed at a very, very high rate, like 200%.
Watching pharma stocks when they come online here in Australia, given that's one of the biggest exports from Australia to the US, amongst some of these other jitters that continue to play out. Bloomberg's Daniel Flatley joins us now for more on all of this trade uncertainty. And, you know, we sort of had it kicked off in the previous session. There seemed to be some sign of sort of conciliation, or at least kicking the can down the road when it comes to the deadline. But at the moment, we're hearing the president sound more hawkish than ever.
Yeah, that's right. I think it's interesting to kind of look at the totality of sort of the developments on trade over the last few days, and let's kind of remind ourselves of where we are. So tomorrow is July 9th. This was, in theory, to be the deadline for the extension that President Trump put in place earlier this year after initiating these tariffs. And so what we have now is essentially an extension in a way of the extension. Trump has sort of, worked today to kind of reinforce the idea that August 1st is really the deadline. He also announced what we weren't expecting, which was potentially 50% tariffs on copper, and talked about the pharmaceutical tariffs, which you mentioned. But I think if you take it all, you step back from it for a minute and look at it all, I think the situation is still very fluid, and I think that's probably why you've seen a little bit of a muted reaction in the market, because folks are still trying to understand exactly what is going to happen here. And it's possible that if you have, obviously, one extension and another extension, you could have an extension beyond that. And, the question remains, is President Trump just seeking to give himself more leverage to try to bring some of these deals that the administration has said are close to being finished, to get them over the finish line? So, obviously still a lot of moving parts here.
A lot of moving parts when it comes to the European Union and China negotiations as well. What was interesting, though, was the harsher tone, perhaps, from the EU president accusing China of distorting trade, calling the system explicitly rigged. Where are these negotiations going?
Yeah, that was very interesting today to see that. It sort of reminded me of something that Treasury Secretary Scott Bessent said earlier this year, which was that the U.S. was working essentially to bring all countries or many countries on to its side and then take a group approach toward China. What we saw or heard from the EU today was something that was very much in line with that philosophy or that tactic. But I think what the main point here, which is interesting to kind of look at, is this question of rare earths and rare earth magnets and components that go into many of the consumer goods and products that are purchased and produced around the world. China controls so much of that production. Rare earths are not so rare. They're found in many different countries, but the production and the processing of those elements occurs to a large extent only in China. And so I think what you've heard from the EU and what you're seeing kind of across the board is a recognition that perhaps China has cornered the market really on those very critical components, and that not just the U.S. but other countries as well are interested in the idea of diversifying a little bit and kind of countering China on that. And so you see different countries, different trading blocs trying to gain some leverage over China's essentially stranglehold on that particular industry.
Bloomberg's Daniel Flatley there with the latest on those trade negotiations, as we're also following the U.S. Secretary of State Marco Rubio's visit to Malaysia for an ASEAN Summit. China's Foreign Minister Wang is also set to attend. Our correspondent Min Lo joins us from Kuala Lumpur. Min, this will be a very interesting event.
Yes, Marco Rubio, of course, he is the highest-ranking U.S. official to visit Southeast Asia, his first time to Southeast Asia in his capacity of Secretary of State. And while this is a foreign ministers' meeting, typically a platform to discuss geopolitics, security, so usually top of mind would be issues like the South China Sea and the tension with China and the territorial conflict there, as well as the ongoing political conflict in Myanmar. This time, an eye on the Middle East as well. Malaysia hosting a Palestinian redevelopment sort of session as well. But of course, the event is no doubt under the shadow of President Trump's latest tariff gambit. So Secretary of State Marco Rubio is here, and while the State Department, it's not their mandate to really lead trade negotiations, he will almost certainly be getting questions from his ASEAN counterparts about those tariffs, because President Trump just sent those tariff letters out, a lot of them targeting Asian countries. In particular, Southeast Asia had been very badly hit. Think about 40% tariffs on countries like Laos and Myanmar, over 30% on Indonesia, Thailand, 25% on Malaysia. So these countries, many of them still want to continue these trade negotiations with the U.S. to figure out is there potential to push back the August 1st deadline for those levies as well. So there will be a lot of discussions around that, although the State Department has said their key message here is about reaffirming U.S. commitment for a free and open and secure Indo-Pacific. But it's also a chance for them to reassure Asian allies and partners that the U.S. is not about to retreat from its diplomatic and economic leadership in this region as well.
It's quite difficult to draw that line between the sort of trade animosity that's going on and still that commitment to broader geostrategic and security and diplomacy, right? What sort of issues do you think will come up when it comes to trade? Because we know that President Trump in particular has been really hyper-focused on the issue of transshipments to do with China.
Yes, that's certainly going to be an issue, not just the transshipment and the tiered tariff system, especially for Vietnam, but also President Trump's latest threat to add this 10% penalty tariff on countries aligned with BRICS nation. And remember, Indonesia just joined the ranks of BRICS members earlier this year. You have Malaysia and Thailand, also partner nations of the BRICS as well. So that's another issue for the countries to focus on. ASEAN countries as a whole have been advocating for putting together a united front so that they can leverage their collective strength, 700 million people, a $3.8 trillion economy, so that they can have an independent foreign policy that's not too unduly influenced by the United States. But so far, that stance hasn't really shielded them from individual levels of tariffs. Not to mention, you have the Chinese Foreign Minister Wang Yi, Russian Foreign Minister Sergei Lavrov, the envoy from the EU, South Korea, Japan. They will all be coming here. So ASEAN countries will be meeting their partner nations to discuss whether they should enhance trade beyond the U.S. as well.
Bloomberg's Min Lo there with the latest. And President Trump says he'll meet again with Israeli Prime Minister Benjamin Netanyahu to discuss securing a ceasefire in Gaza.
He's going to come over again tonight. We're going to be talking about, I would say, almost exclusively Gaza. We got to get that solved. Gaza is a tragedy. It's a tragedy. And he wants to get it solved, and I want to get it solved. And I think the other side wants to get it solved. We think we're going to have it solved pretty soon, hopefully with a real solution, a solution that's going to be holding up.
Let's bring up Bloomberg senior editor Derek Wallbank. We've seen sort of a couple of, formal occasions at dinner. There's been a lot of sort of mutual appreciation, certainly a lot from Benjamin Netanyahu's side. What are we expecting given this promise that they'll almost exclusively discuss the ceasefire?
Well, I think that this is something that Donald Trump has said very clearly he wants to get done. He wants to get a number of conflicts resolved, and one of the tops on that list is the one in Gaza. He spent an awful lot of time talking about this with Benjamin Netanyahu during their big dinner. They're going to talk again. Trump is very insistent on trying to get something over the line here, and so that's going to be the principal thing that they're going across. The deal that's sort of coming together, if this were able to get done, would see some hostages released. We've heard contours around about a 60-day ceasefire, and the idea being that all of that would sort of set the stage for something that may be longer lasting and allow for hostilities there to come down. But I think the long story of this conflict, certainly since October 7th, has been there has been a lot of intractable violence, and that's going to be a situation that is, I think, one that is far more difficult to solve than maybe the White House had originally thought. So, as I say, Trump really wants to see this one across the finish line. He's dedicating an awful lot of time to it, an awful lot of political capital to it. Getting it across the line is a very, very difficult job indeed.
And European leaders, of course, watching the situation very closely. French President Macron also actually calling the UK to recognize the state of Palestine.
Well, yes, that's right. And Macron has been on this on this for a little bit now, and he made the case to the United Kingdom, that they ought to join up and recognize Palestine as an independent state. Now, that is not something that the Labour government under Sir Keir Starmer has been prepared to do. This is certainly a government that is more sort of tilted in that direction than their conservative predecessors were, but at the same point hasn't been willing to quite go that far. There have been concerns that a number of top officials have said over there that they're not sure what exactly that would accomplish. There has been a wave of some countries wanting to recognize an independent Palestine as a state, but it hasn't necessarily moved the needle, and so that's been one of the critical concern points. If you were going to take a step like that, what are you going to see as a result result from it. Now, it also bears mention the fact that in his meeting with Donald Trump, Benjamin Netanyahu was pressed specifically on this point, and again restated, that any sort of Palestinian state, in his view, would not necessarily have operational security controls. That Israel would be the one that has the security controls, saying that it was an existential threat if that was not the case. Now, what is a state without security? It gets into a whole lot of questions there, so there's not really been any movement on that point. And I think, as I say, in the UK, a lot of the question has been, if we do this, what changes on the ground as a result?
Bloomberg senior editor Derek Wallbank there. And coming up on the Asia trade, more on the Trump tariffs with former U.S. trade negotiator Stephen Olson. We talk investment strategy also with Vantage Markets, and Masan Group CEO Danny Lee joins us exclusively from the Techcombank Investment Summit in Hanoi. We have much more ahead. This is Bloomberg.
He should resign immediately. We should get somebody in there that's going to lower interest rates.
Do you want congressional Republicans?
Why don't you call for his resignation?
Do you want congressional Republicans to investigate and pursue?
It's okay with me. I think he's terrible. He's always late. But he wasn't late with Biden before the election. He was cutting him like crazy. It didn't help too much, did it?
President Trump saying Jerome Powell should resign if allegations from an administration official that the Federal Reserve Chair misled lawmakers prove to be true. For more, let's bring Garfield Reynolds, who leads our Markets Live Asia coverage. So, Garf, another day, more sort of tussles over trade. How's the market feeling, given that we've seen an extraordinary level of, not complacency, at least calm?
Well, the market is struggling, I think, to work out whether its assumptions are still, actual, like whether they work. The initial assumption coming into the year was that huff and puff as much as he might on tariffs, Trump would ultimately take a softer angle on that. What he would do was push through tax cuts and a reflationary budget package. Both the initial Canada, Mexico, China tariffs shattered that perception, and Liberation Day really sent things out of control, only for Trump to set off what's become known as the taco trade by delaying tariffs. So now here we are. The tariffs still keep getting delayed, but the level of rhetoric and threats from the president has really ramped up, with copper coming in for maybe 50%, these trade letters, and Trump still sort of is going backwards and forwards on it, but he is at least trying to create the impression that August 1, this time really is going to be a serious deadline. So there's a lot of confusion. There's a reluctance to buy in too strongly to the idea that tariffs won't do damage, because they're on the radar now. But there's an even greater reluctance to pull back. Any dips are still seen as buying opportunities, because in the quantum of potential outcomes, the most likely one is still seen as being that by the end of the day, Trump will not inflict severe damage on the US economy in particular through these tariffs. So he will pull back at some stage. Hence, we've got a lot of up and down and sideways.
And a lot of volatility when it comes to the Treasury space and just global debt markets, right? I mean, we have to continue digesting these auctions, whether it's a 3-year auction in the U.S. or a 5-year auction here in Japan as well, that were pretty soft.
Yes, and bonds have had actually quite a a good year, and in particular they've been more stable than stocks, but there are signs that that's started to come to an end, and the big beautiful bill is part of that backdrop. It has confirmed that we're going to get this big increase in the US deficit, and that issuance either at the short end or at the long end is going to go up. We also have Trump's pressure, as Heidi was talking about earlier on Chairman Powell and what that might mean. And you have this general, policymakers are facing the same sort of uncertainty that businesses and traders are facing. If you look at the RBA yesterday, where it's surprised by not cutting rates, and part of the backdrop to that was that when they cut rates last time, they cited a lot of concerns about the global outlook for trade and what was going on with that. And then this time, they noted the way markets had come back and sort of accepted the idea that maybe trade's not going to be such a big hit, and either way they should wait and see. So you've got a lot of waiting and seeing on the policy front. That's making it difficult for bonds, and that also feeds into what's going on in Japan, where the BOJ is not clear if it's going to let things get out of control on the inflation front because it's concerned about tariffs, so let's hold off on rate hikes. Meantime, the government is seen potentially boosting fiscal spending, and that's coming at a time when they've already faced difficulties in getting issuance away, against the backdrop of the BOJ pulling back from bond buying. So you've got a lot of both idiosyncratic but also general reasons for debt to be under pressure across the major areas. We've had the UK mini sell-off the other week on the concerns about Chancellor Reeves. We've also had at times concerns about German government debt because Germany is going to boost spending on defence because of, geopolitical uncertainty, at least partly fueled by President Trump, but also fueled by, the war dragging on in Ukraine. So you've got a lot of reasons to be wary about bonds and fewer reasons to be bullish on them right now, other than, the underlying potential that global growth is going to slow. So much like equities and and currency markets as well, you've got a lot of factors pulling bonds every which way. Bond investors, though, perhaps are more adverse to uncertainty than others. So that's going to make these auctions in Japan and elsewhere going forward a particular pressure point for some time to come.
Yeah, more uncertainty with President Trump now releasing on social media that they will give an update on trade with 7 countries on Wednesday. So we'll be watching out for what tariff levels we can expect this week as well. Bloomberg's Garfield Reynolds right now with the latest on the market outlook. Coming up, the annual Allen & Company retreat in Sun Valley kicking off on Tuesday, bringing together media moguls and billionaires. We get the latest updates from the conference next. This is Bloomberg.
Some of the other stories that we're following this hour: Brazilian President Lula da Silva is aiming to deepen trade ties with fellow BRICS member India. During a state visit to Brasilia with Indian Prime Minister Narendra Modi, Lula said he wants to triple trade flows with the South Asian nation from $12 billion last year. Brazil has been pushing to diversify its trade partners as US tariffs upend global commerce. President Trump says he's considering whether to take control of the city of Washington, D.C. to help combat crime. Speaking to a cabinet meeting, Trump said his chief of staff is in contact with Washington's mayor. He didn't give any details on what he meant by the White House running the city. City residents have elected their own local government since 1973, but Congress also reviews local laws and budgets. The US Supreme Court has allowed President Trump to move ahead with plans to dramatically reduce the size of the federal government. The justices lifted a court order that had blocked 19 federal departments and agencies from slashing their workforces. More to come here on the Asia Trade. This is Bloomberg.
The annual Allen & Co. retreat in Sun Valley has begun, bringing together global tech and media moguls. Bloomberg's Ed Ludlow joins us from Idaho. And Ed, we know that some big names are on that guest list, including Sam Altman and Mark Zuckerberg. What are the highlights this year?
Yes, I mean, we've already had the opportunity to speak to Sam Altman, and as you'd expect, the questions were about whether or not he is going to speak to Mark Zuckerberg this week. You'll remember that Altman, in a podcast a few weeks ago, had claimed that Meta were offering 9-figure compensation packages to lure OpenAI talent to the Meta superintelligence team, and they were successful in those endeavors in a few cases. But basically what Sam said was, look, he's looking forward to seeing Mark Zuckerberg. He's not spoken to him yet, but their strategy, OpenAI's strategy, is to have the best research lab, the best company, and be very mission driven. And you know, that was kind of a reference to his earlier statement that perhaps Meta were acting more like mercenaries than missionaries. But you know, inevitably, those are the kind of two high profile people that folks here look out for, because it's just kind of awkward.
The awkwardness aside, what else are we sort of setting up for in terms of expectations?
Yeah, I mean, the history of Allen & Co. Is that it's a TMT and M&A focused conference, and it was interesting and timely that the reports came this morning that Disney and Hearst are looking at the sale of their JV, which is called A+E. It's cable channels like History Channel, for example. Now, there are interesting other properties at play here. We heard from Warner Brothers and David Zaslav. You have Brian Roberts from Comcast here. It could be a signal that, you know, particularly in that marketplace in media, maybe there's some activity. You know, we're showing Bob Iger on the screen. It wasn't that long ago that he was coming here having been in retirement, and then he came out of retirement. So there's always a lot of questions for him about how long he'll continue at Disney in succession. But that's been a big point of interest, the marketplace for some of these properties.
And Ed, we understand you have some exclusive news when it comes to SpaceX and their plans to raise money. What can you tell us?
Oh, sure. I mean, when it rains, it pours, right? So SpaceX is doing this mechanism that it's done historically, a concurrent primary round where it sells a very small amount of new equity to set a price and valuation for a secondary round or tender where employees and early investors are able to sell shares. The price range we understand on those shares is about $208 to $212, which would value SpaceX at more than $400 billion, which is a pretty big jump from its last valuation of $350 billion. It would make it the most or highest valued private American company ever. And so for all the attention right now on Elon Musk and his relationship with the Trump administration, SpaceX is still growing, right? Starlink increasingly important relative to the launch business. And there's just like a lot of investor appetite to be in this name through the private markets. It's something they do regularly, but that valuation is certainly a big piece of news amid volatile news headlines and its CEO, Elon Musk.
Bloomberg's Ed Ludlow there with our Bloomberg Scoop. And let's get you some of the other tech headlines that we're following. And a long-time Apple Chief Operating Officer Jeff Williams is stepping down later this month, marking a major changing of the guard for the iPhone maker. The company says he will hand over his post to Deputy Sabi Khan before retiring from the company later this year. Apple's design team will report directly to the CEO, Tim Cook, after Williams departs. Bloomberg reporting that Meta has bought a minority stake in EssilorLuxottica worth $3.5 billion. The eyewear maker's ADRs jumped in New York trading. Sources say Meta acquired the 3% stake but may boost that to about 5% over time. Meta's investment deepens the relationship between the two companies as they've developed Ray-Ban and Oakley-branded AI smart glasses. Shery.
And Heidi, take a look at how futures are trading at the moment. We're not seeing a lot of movement after stocks finished unchanged in the overnight session. This, of course, as traders are still digesting news of more tariffs to come from President Trump. We're still near all-time highs, and we've been following the U.S. dollar, which has been swinging between gains and losses in the session as well. On the other side of that trade, we had the EM/FX picture a little bit mixed as well. But do follow, for example, the Chilean peso and Peruvian sol, given given that, of course, are big exporters of copper, and prices of copper, of course, soared given those tariff threats of 50%. Let's bring in Stephen Olson, visiting senior fellow at the ISIS Yusuf Ishak Institute. He previously served on the U.S. team for the NAFTA negotiations. Steve, really great to have you with us. Of course, we started watching the trade negotiations from blanket tariffs back in April till now. Do we have any more clarity about where they are going?
Well, to be honest, I don't think anything has really fundamentally changed over the course of the past day or so. We've still got a boatload of tariffs, in some cases substantial tariffs scheduled or threatened to go into effect at some point in the future. And we've still got a long line of countries lined up trying to strike trade agreements to alleviate those tariffs. Now, what I think has come into sharper focus is that the United States perhaps was a little bit overconfident entering these negotiations. You recall that we initially heard a lot of talk about, quote unquote, 90 deals in 90 days. Well, we're at the end of 90 days, and we've got a grand total of 2 deals done, 88 still pending.
Not just overconfidence, but the fact that perhaps the goal of these trade negotiations might be shifting for even Washington. Because if you take a look at all of the trade negotiations, we thought that one with India was actually going pretty well. And now you have threats of tariffs on BRICS nations. How does this bode for negotiating partners?
Well, exactly. These extraneous factors can pop in at any time. All of the mood music around the prospects for an India agreement were very positive, and then we got a late Sunday night, I believe it was, social media post from the president railing against BRICS and threatening an extra 10%, which could derail those talks. For the countries, particularly in the ASEAN region, the other extraneous factor is their relationship with China, because it's becoming increasingly clear that the United States is using these negotiations to really put pressure on these countries to try to squeeze China out of their supply chain. So that's an additional complication for these negotiations.
You just touched on the issue of transshipments, right, which has been sort of a real key focus for President Trump. Is there anything that these Southeast Asian ASEAN nations can do, substantively to be able to change that dynamic?
Well, look, certainly they can step up enforcement on illegal transshipments. This is a case where a product enters Vietnam, for instance, from China, and the customs documentation is fraudulently altered to convey Vietnamese country of origin status. Now, that's flat out fraud. It's flat out illegal. And so some enhanced procedures to crack down on those practices certainly could move the dial at least a little bit.
The really haphazard nature of the way that President Trump releases the news and makes these headlines. We just had a post on social media saying that they'll be releasing a minimum of 7 countries having to do with trade, with an additional number of countries being released in the afternoon. I assume that means sort of an update on a minimum of 7 countries when it comes to trade. We've had conflicting news as to whether July 9th was a true deadline, whether it could be extended. It's now been extended. Could August now also be flexible as well? Do you think this sort of piecemeal approach is helpful for other nations? Because you raised the point, at what point do these counterparties just think, well, what's the actual point in trying to negotiate when everything is just constantly up in the air?
No, I don't think it's helpful. And I think you used a fairly generous and kind word referring to the approach as being haphazard. It's been even more discombobulated than that. And at a certain point, countries start wondering, look, if the goalposts are constantly being moved, if extraneous issues are constantly being dragged in, and if we never know if a deadline is a real deadline or not, at what point do countries start to question the point of engaging in the process?
And when does the American public also start questioning the negotiations? When you were part of the negotiating team for NAFTA, was that something that you had to perhaps keep an eye on how this would affect actual American people? Because all of these tariffs will eventually translate to higher prices for these consumers.
Business community, yes. General public at large to a lesser extent. Typically, you won't see the American public getting engaged on trade issues unless or until it starts to hit them in the pocketbook, and that will be a little bit further down the line.
There's this idea that Trump's tariff policy has the intention of reshaping global trade, the contours of global trade, right? But even the agreements, if you can call them that we've gotten so far, have really just been broad frameworks or sort of more MOUs, even just sort of handshake agreements. Can we truly say that whatever is achieved is going to change the trajectory of the global trading system?
I don't think so. I mean, for any trade agreement, the devil always lies in the details. And as you pointed out, in all of the agreements we've seen thus far, there are virtually no details. And beyond that, a number of issues, in many cases, the most important and the most difficult issues require further negotiation. So what any of these agreements ultimately end up looking like could be quite different from what we see today, or in the worst case scenario, some of these quote-unquote deals could actually unravel.
Is that going to be potentially the case with the Geneva framework agreed with China? And will President Trump still have the political capital in order to go back to the negotiating table?
Well, it's certainly going to be tough sledding with China. We saw an additional round of meetings necessitated to take place in London just to sort of reiterate what they thought had already previously been agreed in Geneva. If that's the case moving forward, these are going to be long and arduous negotiations. But keep in mind, the issues between the United States are deep, structural, and fundamental, and are not going to be resolved in a number of weeks or number of months.
The point that Shery just mentioned in terms of political capital was an interesting one, because I also wonder, in your experience as a trade negotiator, is it sort of commonplace for trade issues to be rolled up also with sort of broader issues in terms of geostrategic alliance, in terms of, you know, broader diplomatic relationships? Because you see these terse relations when it comes to trade with key security allies like South Korea, like Japan in this part of the world. Huge implications for the Indo-Pacific. Do you think that side is going to be damaged when they can't even reach an agreement or compromise on trade?
This is a new sort of innovation, if you will, introduced into trade policy by President Trump. When I was a trade negotiator, the thought that we would be discussing with our Canadian and Mexican colleagues fentanyl or illegal immigration would have been astounding and mind-boggling to us. Trump's approach is everything is on the table, and this is very much of a different approach and is going to complicate things significantly.
Stephen, really great to have you with us. Stephen Olson, visiting senior fellow at the ISIS Yusuf Ishaq Institute. We'll be continuing that conversation when it comes to all of the trade uncertainty with Techcombank investment, the summit taking place in Hanoi. We'll be speaking in the next hour to Masan Group CEO Danny Le about these tariff threats, a potential IPO out of their consumer unit as well. This is Bloomberg.
Take a look at how Japanese futures are setting up ahead of the market opens, because we saw gains in the previous session as the Japanese yen continues to be pressured. We're talking about nearing that 147 level against the U.S. dollar, but we'll be watching in Japan, of course, will be the bond space as well, because we have seen those super long bonds extending losses. We're talking about a soft demand for a 5-year auction. We do have a 20-year auction as well coming up this week, and with the upper house election fueling concerns about fiscal spending, of course, we are watching JGBs, the liquidity index already hitting historical highs. What we'll be watching in the stock markets as well are how investors are positioning for a rally in Japan's beaten down auto stocks, which could be ripe for a rebound on a last-minute trade deal with the U.S. Our senior stock reporter Hide Sano joins us now for more on this. And Hide, why are we seeing positioning already getting ahead of no news right now on any progress in these negotiations?
Well, I mean, this is not so much about rising optimism as rethink of extreme pessimism about the sector. We know everyone was very negative about auto sector for obvious reasons, but Trump has decided to extend the deadline to August, and that's pretty significant for Japan because we have an upper house election, and everyone knows that any politically difficult decision will be very hard to do that before that. So the speculation some investors have at this point is perhaps Tokyo may be able to clinch a deal with Washington after the election. And of course, nobody knows what the art of the deal will be. But one possibility is that we know that Japan, one sticking point is tariffs on autos. And that's one of the priorities. And Trump has talked about rice. So maybe we could have some concession on autos in exchange for importing rice.
That's a lot of maybes.
Yeah, a lot of maybes. So, I mean, it's not like investors are betting on that. But if you look at positioning, everyone is shorting auto sector. So perhaps it's time to review their positions slightly a little bit to prepare for possible change in the direction.
Or perhaps it's the right call, given that, of course, this sector faces structural challenges as well.
Exactly. So when I throw around this idea that perhaps auto might be ripe for a rebound, I do get a lot of pushbacks. And one question is obviously, like you said, they have a lot of troubles ahead. And also there's a question about exactly when their earnings will recover. But if you think that there will be some clarities after August, then perhaps investors starting to look ahead to next year. So we're likely to see a very shrink in their profits this financial year. But after that, perhaps things will look better because Japanese carmakers are starting to pass on tariffs to consumer prices in the US. At the moment, only Subaru has done that, and companies like Toyota hasn't really passed on the tariffs yet. But obviously, many investors question how long they can keep doing that.
And I guess just before we came on air, I was just mentioning to you how the yen has weakened, and we're now headed back towards that 147 level. So how much of a boost, I guess, will this give to exporters, not only for automakers, but for the broader Japanese equity space? Yeah,
I mean, it's interesting that the yen has weakened this time after Trump talked about a new higher tariff rate. So the concerns about the yen strengthening may be weakening, and that is also a positive factor for auto shares as well.
Hide Sano, good to have you with us, our senior stock reporter here, speaking to the auto sector here in Japan. Of course, those incredible losses that we've seen already in that space this year. Other stories that we're following: Bloomberg has learned that Starbucks has received proposals from investors interested in its China business, with most seeking a controlling stake to exert greater control. Sources say Starbucks is shortlisting potential investors for the next round of bidding. Plus, Starbucks prefers to sell a minority stake. It may now consider selling a larger holding. Boeing says it delivered 60 aircraft in June, its best showing in 18 months, reflecting factory improvements and resumption of exports to China. The surge puts Boeing back on the even footing with rival Airbus, which delivered 63 jets last month. Boeing had been hit by a series of crises, but momentum has shifted, with Airbus now struggling to hit its production targets. We have more ahead on the Asia trade. This is Bloomberg.
take a look at what we're watching when it comes to Australia and New Zealand bonds there, of course, after the bombshell that we saw in the RBA's unexpected hold on interest rates yesterday. We did see that really rise across the yield curve when it comes to Aussie bond yields after that hold. That was really an outcome that was forecast only by 5 out of 32 economists. We also saw quite a bit of strengthening when it comes to the Aussie dollar. We're also watching the RBNZ today. Really, it'll be hard to see a way that where we see the RBNZ really sort of outdo what we saw from the RBA. They seem to be holding rates while leaving the door open to further cuts in that decision later on today. But in the meantime, let's bring out RBA reporter, our economy reporter, I should say, Swati Pandey, who's actually on the ground when it comes to a Q&A that's just wrapped up with the Deputy Governor of the RBA, Andrew Hauser. Some really interesting points to come out. My favourite was him saying that the RBA lives in the real world, not to live in the ivory tower. So what was he covering at the Economic Society of Australia conference, given that obviously the backlash has been where was the communication from the RBA, given how shocking this decision was yesterday?
Good morning, Heidi. Andrew Hauser's speech was actually about history of Australia, and in fact, since he has arrived here from the Bank of England, he has mostly given history lessons to Australians. And the question he was asked was really about the impact of wealth distribution and inequality around the world that is seeing the type of politics that we are seeing in the UK or in US. That was the question, and how central banks could respond. And in response, he said that central banks need to live in real world, and unprompted, he said the RBA is living in real world. And I think it probably was because of the criticism they have received since the rate hold yesterday.
He also said that central banks are watching global uncertainties, quote, like hawks, and I wonder if that's a deliberate language. Is it a hawkish hawk that he's talking about? But Swati, did he give much sort of insight into where the path ahead lies for the RBA, given that we know, even just hour by hour, there's so much uncertainty when it comes to the global outlook with trade?
No, in today's speech and Q&A, he did not particularly address monetary policy and the path for interest rates in Australia. It was kind of more global, more impact around trade policy and U.S. and global uncertainty and volatility, and how that will feed into Australian economics and research. Obviously, they are sounding very worried. They are sounding cautious, and that caution was one of the reasons that Michelle Bullock, governor of the RBA, yesterday said they wanted to feel their way as they go down, and they want to be confident that they have won this battle against inflation, and they don't want to be fighting inflation again. That was very strong wording from Michelle Bullock yesterday. And today, Andrew Hauser was kind of reiterating that point that there is a lot of uncertainty.
Indeed, Bloomberg Swati Pandey there. And of course, take a look at some of the stocks that we're watching when trade opens in Australia, Korea and Japan shortly. We'll be watching copper stocks in Asia. We could see it advance after President Trump said he planned to implement that 50% tariff. We saw that big surge of about 70% trading on the COMEX, a record one-day spike. Also potentially moves in pharma stocks.
This is the Asia Trade. We're counting down to Asia's major market opens, and perhaps a little bit of caution, Heidi, given that, of course, President Trump is now threatening 50% tariffs on copper. So we'll be watching the metal space. And, of course, those blanket tariffs on countries, that deadline pushed to August 1. But President Trump also signaling that there perhaps might be no more delays.
We're also hearing a potential update when it comes to 7 countries, potentially more countries, whether that's a trade update in the coming days as well. And, Shery, we're watching pharma stocks as well as some of those copper names in today's session.
Yeah, so a lot of uncertainty, variables, moving parts across markets that investors really need to digest today, including, of course, sovereign debt auctions that have been softer than expected globally. So we're talking about the Treasury 5-year auction, 3-year auction being pretty soft. We have the JGB 5-year auction being pretty soft. We do have a 20-year auction on Thursday as well that we need to contend with. Of course, we have the upper house elections coming up here in Japan later this month, and that's leading to more concerns about the fiscal picture. So we are seeing JGB liquidity index now at the highest levels on record. But take a look at the broader market, because we're seeing the Nikkei actually push higher, 0.7%, extending those gains that we saw in the previous session, because perhaps a little bit of a boost coming from a weaker Japanese yen. We're talking about 3 sessions of losses already and headed towards that 147 level against the US dollar. Take a look at how Korea is also coming online, because we had a little bit of a boost for the Kospi, a little bit of a boost for the Korean won in the previous session. Of course, the fact that President Trump signaled openness to tariff negotiations helped boost sentiment, and you have the Kospi gaining 0.4% at the open. Heidi.
Shery, take a look at what we're setting up when it comes to Australia. Of course, let's not forget we've also got the RBNZ rate decision. They are expected to hold whilst keeping the door open to further moves. But, of course, focus is really on the reaction across some of these Australian assets, given the shock hold that we had from the RBA. We heard a little bit from the Deputy Governor, Andrew Hauser, in a Q&A a little bit earlier, but really a question of the communications aspect of how that decision was so unexpected by markets and economists. But the other big sector that we're watching is obviously metals, industrial metals, copper in particular. We're expecting that big move when it comes to Asian copper stocks, as we saw the threat, of course, of that 50% tariff by Donald Trump on copper imports. That caused a huge spike when it comes to American pricing. We've already seen a spike when it comes to American factory pricing there as well. But the 200% threat on pharmaceuticals is another one that we're watching, given it's going to impact a lot of these Asian exporters, including here in Australia, where pharma is actually the biggest export category sector-wise to the US. Let's get more on all of this sort of trade volatility now with Hebe Chen, who's a market analyst at Vantage Markets. And, you know, another sort of headline-driven day. We've seen markets really struggling to work out what's just noise and what's ultimately going to be kind of the final picture for global trade, right? What are you seeing at the moment?
Morning, Heidi. Thank you for having me. Yes, indeed, we have a lot of noise in the past 3 days. And I think that now, for me, the most important thing is not about what has been announced, what he said, but more about what Trump's destination, what's the final goal of that. I think that for the past 3 days, it's getting pretty increasingly clear for me. If you connect the dots for the past 3 days, starting from a chip curve to the Malaysia, to the Thailand, and moving to anti-BRICS, and yesterday was pretty much a Asian countries focused tariffs. Now, if you connect them together, I think that's quite obviously that what he's trying to targeting is not just about the trade imbalance, but rather is to reshaping the regional power structure. And that's the destination, is that the final stage. I think I'm pretty positive that some deal can be made before August 1st. But the final stage, the final battlefield will be in between the US and China. So I think until that happening, until that we got more clear message coming from that, which I assume that will taking some quite a long time, that I think the uncertainty will still stay at very much high level.
How do you invest around that uncertainty then?
Well, I think the uncertainty, firstly, is coming from that how the deal will shape up, how the regional deals will shape up before the August 1st, which I'm positive for some deal can be made. But after that, we will have the next deadline is the August 12th, is the US-China deal. At this stage, we don't have much clear detail about what they have negotiated last month. So I think after all these deals with Asian regions, with the other countries, including Australia, now they will focus on what's the real deal that US trying to make with China.
So, given the uncertainty of what that real deal will look like when it comes to market investments, where do you put your money in order to hedge for whatever the outcome might be? Because you are still remaining invested, right?
Well, yes, exactly. I think for the market, it's definitely, I think, back to the old class textbook method is that you have to diversify your portfolios. Quite a big chunk, I think, compared to this year is different from last year. You definitely have to put more of your portfolio into more safe havens asset. But in terms of the market-wise, I think that the Asian markets will certainly face more pressure towards the end of the 1st August, the deadline there, and potentially that will extend into the rest of August when the US and China is on the negotiation table. I think this is the market we're getting more risk, and given the Asian market has been up so much so far this year, I think they're getting quite risky. The ground there, the sky for the market to keep moving will be quite limited there. But turn to the US market, I think that's another story. I think that given what happens in the past 3 days, the inflation risk for me, for the US economy is getting pretty high, and the new tariffs is even higher. So I think the inflation risk is the major risk, a major uncertainty for the US stocks, US companies. But for the Asian countries, for Asian region stock markets, the economy outlook is the major threat and uncertainty.
And yet, for U.S. markets, you still have Goldman Sachs raising their outlook for U.S. stocks for the second time in 2 months. And many analysts that we speak to perhaps say that the inflation concern might not be as big because of what product these tariffs are actually targeting and how this will actually filter through the American economy. So are you staying away from U.S. markets, or do you still see some opportunities there?
Well, I think I would divide my view into the very near term. I think in the next 2 to 3 weeks before the August, I think I'm still positive for the U.S. stock because I do see the two major catalysts that will in place to keep the flow for that to keep growing. One is that the upcoming U.S. earnings seasons. Now, markets expecting a 5% growth of earnings per share, which I think that because they're coming back to the second catalyst there is the weakening U.S. dollar. Because the U.S. dollar has dropped about 7% in the second quarter, and that will potentially translate into the tailwind for the major U.S. companies if they have large international exposure like Mag 7. So I think for these two catalysts, we're working together, at least for now, to painting a pretty healthy picture for the U.S. business when we're seeing the U.S. earnings seasons coming through. But after that, into the August, now where we're going to see the real impact, materially impacting into the economy and inflation, I think that will be the next stage. So in the near term, I'm still positive, but in terms of midterm and long term, I do have quite a bit of cautious on the US stocks.
Hebe Chen, market analyst at Vantage Markets there. Take a look at what we're watching when it comes to copper stocks, as well as a move in LME copper, up about 2.5% after Trump announced plans for a 50% tariff on copper imports. We are seeing, of course, that follow through when it comes to that all-time high trading in New York, pricing of as much as 17% on the COMEX there as well. Taking a look at some of these copper names, we are seeing quite a bit of downside, actually. BHP Group looking pretty flat at the moment. Obviously, some of the diversified names, there's other elements at play, but some of the more copper pure play names, Sandfire Resources down by just about 9%. Pharma stocks is the other sector that we're watching as well, with President Trump saying that he'll be announcing something very soon when it comes to pharmaceuticals during a cabinet meeting. In his words, he said he was going to give people about a year and a half to come in. After that, they're going to be tariffed. And he mentioned that hike of around 200% on pharmaceuticals. Watching some of the pharma names in Australia in particular, given the sort of outsized amount of pharma exports to the US. In fact, it is the biggest export that Australia has to the United States. Interestingly, CSL, one of the big players, up by just about 0.8%. A bit of a mixed picture across some of the other names trading across Japan and Korea. More ahead here on the Asia Trade. This is Bloomberg.
I believe the tariff on copper, we're going to make it 50%. We'll be announcing something very soon on pharmaceuticals. We're going to give people about a year and a half to come in, and after that they're going to be tariffed if they have to bring the pharmaceuticals into the country, the drugs and other things into the country. They're going to be tariffed at a very, very high rate, like 200%.
President Trump on his plans to impose tariffs on copper and pharmaceuticals. Our chief North Asia correspondent, Stephen Olson, joins us now for more on this. And now we have an additional concern around, of course, metals, but also, what's the deal with the delay or no delay aspect of these trade negotiations with country-specific tariffs? Because his tone seems to have changed overnight as well.
Yeah, the tone definitely has changed. Maybe got a little bit of criticism for what some have called the taco trade on Wall Street, essentially that he was giving not so firm a deadline of August 1st. He's changed his tune overnight a little bit and now essentially saying there will be no extensions beyond August 1st, which of course is a delay, 3-week delay that was talked about yesterday from essentially today, Asia time, July 9th deadline for those reciprocal tariffs to return unless a deal had been put in place. Really, there's only 3 deals done so far away from the 90 deals in 90 days that Trump had pledged some 3 months ago. It just shows how difficult and tenuous these kind of deals, are, and they take a lot of time and a lot of negotiation. And when you're negotiating with the world, it takes a long time. So again, let's do a state of play where we are right now. We do have, of course, those individual bilateral negotiations going on after those 14 letters, as you're seeing on the screen right now, went out yesterday with the threatened renewed tariff rates accordingly for August 1st. But what Trump did really overnight was expand this narrative right now. In addition to these bilateral tariffs, or some would say unilateral tariffs, we have these sectoral increases. You've been talking a lot all morning about copper. That's probably the biggest one roiling the markets right now, with this 50% rate possibly on copper products coming into the United States. Look, that's going to be inflationary, whether, just basic economics. When you're talking about, copper goes into automobiles, it goes into all sorts of businesses, whether it's home industry, construction industry, data centers, and the like, and electronics, of course. So that is a very sharp addition to his tariff battle overnight. In addition to pharmaceuticals, the threat of 200% tariffs on imported pharmaceuticals unless foreign pharmaceutical companies move their production to the United States within a year or a year and a half. But again, that's a very short time frame to move a supply chain to the United States. So pharmaceuticals obviously in play. Let me give you an update as well on the negotiations. Remember yesterday we felt there was optimism of a deal between the United States and the EU, as well as the United States and India, because they did not get letters, and Trump indicated that there was progress on both of those fronts. Well, we can take a step back perhaps now on both of those fronts. The EU, according to Trump, the United States perhaps is against, of course, these taxes on U.S. tech firms in the EU. So he's kind of poured a little bit of cold water on a potential imminent deal with the EU. And again, as well, India. That was one that perhaps a deal was forthcoming. However, he's also talking now about a potential flat baseline 10% tariff, simply because India is a member of the BRICS nation. We all know the BRICS over the weekend had a summit, and there was what Donald Trump called anti-American policies coming from BRICS. India is part of that. So they're going to get a 10% baseline tariff ahead of any kind of deal that potentially is signed between the Trump administration and Modi and the Indian government.
And in fact, it seems like this relationship when it comes to the EU and China is just really worsening.
Yes, I mean, the European Commission President, Ursula von der Leyen, again talking about her concerns about excess capacity, industrial capacity in China, trade distortions, and the like. So that's coming a couple of weeks ahead of the planned EU-China summit in Beijing, which has already been truncated from 2 days down to 1 day. We're not getting the official reason why that happened. It was supposed to be 1 day in Beijing on July 24th and another day outside of Shanghai in Hefei, Anhui province. That part of the gathering has been canceled because of these, we would assume, these trade difficulties. Wang Yi, the foreign minister, was also in Europe all last week. So it did not necessarily set the table for a very amicable meeting between the EU and China, and especially punctuated by these latest comments from Ursula von der Leyen. So that's another side of this whole drama that is going on, where China clearly wanted to mend some fences with the Europeans at a time when, of course, the Trump administration is threatening tariffs on the EU and is still having that tenuous trade truce with the United States and China.
Our Chief North Asia correspondent Stephen Engel there with the latest on ongoing trade negotiations around the world. As U.S. Secretary of State Marco Rubio also is heading to Malaysia for an ASEAN Summit. China's Foreign Minister Wang Yi is also set to attend. Rubio's trip comes as President Trump now threatens those new tariff rates, of course, on several Asian countries, including Southeast Asia. Our correspondent Min Lo now joins us from Kuala Lumpur. Min, so what can we expect during this event?
Yeah, this is a foreign ministers meeting, so as the name suggests, it's typically a time to discuss geopolitics and security, and top of mind for Asian nations it's always been the security in the South China Sea, given the territorial conflict of China and other Southeast Asian nations, the recent flare-ups between China and the Philippines in the South China Sea as well, and the ongoing political turmoil in Myanmar. This time also an eye on the Middle East. There is a session to discuss Palestinian reconstruction, given you have two Muslim majority countries here in Southeast Asia, Indonesia and Malaysia, keeping an eye on that conflict. But of course, also this time, the meeting is overshadowed by President Trump's tariff gambit. And you have U.S. Secretary of State Marco Rubio here, the Chinese Foreign Minister Wang Yi, Russian Foreign Minister Sergei Lavrov, as well as the EU top diplomat Kaja Kallas, envoys from South Korea, Japan as well. So ASEAN countries will be thinking about how to counter those tariffs, whether it's about increasing intra-ASEAN trade or trade with other dialogue partners as well. Of course, very important conversations that will be held with Marco Rubio in light of those tariff letters, because Southeast Asia in particular was very hard hit. Think about those 40% tariffs on countries like Laos and Myanmar, over 30% on Indonesia, Thailand, 25% on Malaysia. Will they be able to get further tariff reductions or extensions? And also the issue of transshipments as well that the U.S. is trying to crack down on.
Yeah, the transshipments one is a big one, right, when it comes to President Trump's focus. But I do wonder what options are there for some of these Southeast Asian and ASEAN nations, given how reliant they are to China.
Yes, so they are really in a difficult position because many of these Southeast Asian nations are export-oriented economies. So as a bloc, they do have quite a significant trade surplus with the United States. They rely heavily on trade, including transshipment, and it's hard to enforce now, given, you know, a lot of products these days are made from parts from all over the world. And you have China as the major stakeholder, because remember, ASEAN's trade with China is coming up to about $980 billion US. It's more than twice the volume of ASEAN's trade with the United States. So their position between these two superpowers, how do they balance the interests there? Of course, Wang Yi is here. He will likely be warning ASEAN countries once again not to cut deals that undermine Chinese interests. Perhaps also maybe offering some other carrots to enhance trade with these nations as well. Not to mention, ASEAN also has to contend with the extra 10% tariff threat from President Trump when it comes to countries aligned with BRICS nations. Remember, Indonesia just joined BRICS earlier this year. Malaysia, Thailand are also partner countries as well. So there is a lot of issues on the table for them to discuss.
Bloomberg's Min Lo there. More ahead on the Asia trade. This is Bloomberg. President Trump says he'll meet again with Israeli Prime Minister Benjamin Netanyahu to discuss securing a ceasefire in Gaza.
He's going to come over again tonight. We're going to be talking about, I would say, almost exclusively Gaza. We got to get that solved. Gaza is a tragedy. It's a tragedy. And he wants to get it solved, and I want to get it solved. And I think the other side wants to get it solved. We think we're going to have it solved pretty soon, hopefully with a real solution, a solution that's going to be holding up.
Let's bring in Bloomberg's Michael Heath for the latest. They might also be talking about the nomination for the Nobel Peace Prize as well.
Yeah, sort of an unusual one where you've got a Prime Minister who has an indictment from the International Criminal Court nominating the President for the Nobel Peace Prize, but extraordinary scenes there. But onto that substantive subject, yes. So the ceasefire they're looking for at this stage is 60 days. The estimate is that there's still 20 hostages who are alive in Gaza, so it'd be 10 live hostages released, and some deceased ones as well. But I think, as President Trump sort of hinted there, they're trying to push it through to a permanent solution. And of course, it's really very much in Israel's hands whether it wants to do this or not. The difficulty for Israel, outside of, as I've often said, is this very nationalistic right-wing cabinet is. Netanyahu has said he'd get rid of Hamas out of Gaza. Now, whether that's actually realistic and whether Hamas is prepared to agree to that, these sort of things are, I guess, the issues are at play. But it does sound like we're going to get a truce, which is great. I mean, 56,000 people have been killed, according to the health ministry run by Hamas in Gaza. So Trump is right. It is a disaster, basically.
On the other hand, the disaster around the Ukraine-Russia war continues, and it seems President Trump really not too happy with Vladimir Putin at the moment.
Yeah, Shery, I mean, look, it does take a long time to sort of get through, but he does seem to have sort of recognised that Vladimir Putin isn't interested in peace, which sort of everybody but the president seems to have known. And he's reversed this decision. I mean, we saw last week the US was going to stop sending weapons through to Ukraine because it said it needed them themselves. That's now been reversed, and there seems to be some movement on this sanctions bill that Lindsey Graham has put forward, which is a really, really wide-ranging bill aiming to put maximum pressure basically on Russia. And even some of President Trump's allies have been sort of talking up that pressure needs to be applied to Vladimir Putin. And that's right. I mean, everybody sort of knows from the outside the only thing that Putin respects is pressure. And it's surprising that Putin, that Russia has really gone very hard on Ukraine during this period when Trump was talking about not giving them any more weapons. And it's just shown President Trump that there's no interest there. So really, a lot of people have said in the past that Vladimir Putin's very clever and strategic or whatever. It actually looks very foolish. All he's done is shown so starkly to Trump that he has no interest in peace, and Ukraine is the victim here, which is a pretty basic situation.
The sense that Trump is sort of running out of patience with Russia, is he running out of patience generally when it comes to these ongoing conflicts, and how he obviously sees it reflecting himself as the ability to kind of come in and be the peacemaker that he campaigned on? Yeah, and look, it's fair enough, and he does have that leverage with Netanyahu, and Trump does seem to be able to force Netanyahu to do things. So on that sense, it is good. He's just completely misread Vladimir Putin, but he's right. This conflict's it's been more than 3 years now. A lot of people dying, a lot of innocent people suffering, and really the basis behind this is Vladimir Putin wanting to destroy an independent Ukrainian state because he wants to reassert Russia's dominance there. So there's no logic to that war at all. So I think there is a real degree of frustration, and I think that he'll find that if he applies a lot of pressure, things will start to happen. Thanks, Michael Heath there. Let's take a look at how European futures are tracking at the moment. Of course, copper and metals is, again, the major theme that we're watching on top of pharmaceuticals, given the threat of potentially 200% levies from President Trump, 50% when it comes to copper imports into the US. We are seeing a little bit of upside when it comes to German DAX futures as well as Euro Stoxx 50 futures at the moment, about 0.2%, potentially just extending the advance that we saw in the previous session. The global trade efforts were seen to kind of continue, but it'll be very interesting to see how quickly that narrative changes, given that we seem to have had a bit of an overnight shift in tone from Donald Trump just over the past few hours. Euro dollar at the moment also looking pretty flat. More ahead here in the Asia trade. This is Bloomberg.
Take a look at how the commodity space is trading at the moment, because copper futures traded in London actually under pressure right now. But this, of course, after we saw this huge upheaval in the commodity space with President Trump saying that he planned to implement a 50% tariff on the imports. We'll be watching the price of copper with the Bloomberg Industrial Metals Index rallying more than 5% and closing at that 154 level, given these threats coming from the Trump administration, despite the fact that the global copper industry has been bracing for these tariffs since February. President Trump then ordered the Commerce Department to lay out the case for imposing these tariffs on national security grounds. Let's get more on the price outlook for copper with our managing editor for commodities and energy in Asia, Clara Ferreira Marquez. Clara, given that we are still awaiting these tariffs to take effect, and if they do, what are the implications for copper prices?
Well, as you can see this morning, a sharp drop in the LME price. We've already seen COMEX down. What's really happening is people are now reading past what we've seen in the last few months, which is a lot of copper going into US inventory, vast amounts. Now what we're seeing is people are saying, okay, the tariff has come in, all of that copper will have to come back out into the market. Now, at the moment in the US, inventories hold more than Shanghai and London combined. Just think of all that copper, more than the US can possibly absorb. It's also, in the grander scheme of things, it's also pretty negative for manufacturing generally. So you can imagine that all of this is really combining into a pretty bearish picture, at least in the short term.
We're already seeing the impact when it comes to factory costs.
We are. I mean, this is 50% is more than expected. It's also coming a bit faster than expected. There's also read through to other base metals, but copper is, if you think about the metal that is really key to manufacturing, it is this. This is the metal that we use in anything that has to conduct electricity, basically. So grids, cars, appliances, anything at all. And US manufacturers are already paying that. Of course, the intention here is to stimulate US production. The trouble, of course, is that it takes a very long time to build a mine, a very long time to process it, and this is not going to have the immediate effect that the Trump administration would want.
If one of the goals is to undermine China's industrial might, what happens if presumably that flow of copper into the US just gets redirected to China?
I think in the long term, the idea here was really to foster US production rather than necessarily to undermine China. The problem, of course, is it does take decades to build a mine. Even those that are already, getting, if you think about the Resolution mine in the US, there are mines that are coming a little bit closer to production. They're still years away. So very, very difficult for him to do that. I think that's probably the greatest challenge here, is how will he close that gap?
What about countries that depend very heavily on these copper exports? What are the implications for countries like Chile?
Well, that's a very good question. In the case of Chile, which supplies a very large amount of US copper imports, remember the US does, of course, rely on imports of copper, Chile may actually see a slightly lower tariff because of other agreements with the US. So I think we might be looking at something more like 25%, which is closer to, or at least a little bit more in line with what we'd expected for the wider industry. But of course, there are many other countries who produce copper where we have a lot of question marks. There's Africa, there's Australia, which may or may not benefit from the same lower tariff. There's a huge amount of uncertainty. I would say this announcement is fairly sort of standard Trump, which is a very bombastic announcement followed by minimal detail around key issues like implementation. Are we weeks away, months away? A lot of those questions remain, and traders will be trying to figure all of that out this morning.
Managing editor for Commodities and Energy in Asia, Clara Ferreira Marquez there. Take a look at what we're watching when it comes to trading in APAC bonds. Of course, we're watching out for that RBNZ decision, as well as just continuing to see that reaction from the shock hold that we had from the RBA. Kiwi bonds are ticking lower in the early part of trading ahead of that policy decision, and futures had been indicating, and we are seeing a little bit of downside there for Aussie bonds, still following treasuries lower. Well, RBA Governor Michelle Bullock is defending the central bank's communication strategy after Tuesday's surprise hold on rates. The decision came after weeks of silence from policymakers, despite efforts aimed at improving information flow. Let's bring our economy reporter, Spuddy Pandy. So this was one of the biggest criticisms as they went into this period of sort of reform, right? And yet really wrong-footed markets and economists yesterday.
That's right. A lot of strategists and traders, economists thought that the RBA's silence was a signal that it was comfortable with market pricing for a rate cut or a series of rate cuts, in fact. And clearly that silence was not a signal. And the RBA ended up wrong-footing markets. But Governor Michelle Bullock was quite defensive when this question was posed. She said it is not possible for her to come out and provide any signal to the market because the decision is no longer being made by her. It's a board decision. And the RBA also for the first time disclosed the unattributed votes. The decision was 3-1 in favor of 6-3, in favor of hold, and which goes to show that that there was debate around the decision and the decision was independent. That was the point that Michelle Bullock was trying to make. The critics are still saying, though, that other central banks who do have this similar structure are able to provide the guidance. So clearly, RBA should be able to do that as well.
So, Heidi, what are the data points that the RBA and that economists will be watching in the next few weeks?
The biggest one is inflation. So we get quarterly inflation data for the second quarter at the end of this month. And that is the most important one because Michelle Bullock did signal yesterday that if that number is 2.6 or lower, the RBA would seriously consider easing policy at its August meeting. So that is the biggest one. The other important one is labor market. Unemployment is still very low in Australia at 4.1%, and the RBA's expectation is that it will remain around that level. So they want to engineer a soft landing. They have so far said that they are looking successful in that endeavor. So if inflation is continuing to go down and the labor market remains strong, easing cycle momentum will gather from here.
I mean, at least we know what the RBNZ is expected to do today. Is it interesting that they're expected to hold, given that we know that growth momentum is also seen to continue to slow?
The RBNZ has eased quite rapidly, right? Just the way they went up, they have gone down. They've done like a couple of 50 bips increases. They went back-to-back 6 cuts. And so it's 225 basis points of cuts in their easing cycle since August of last year. And at the last meeting in May, the governor said that they do want to wait and see how that easing is flowing through to the economy, and they do want to pause and see how things are, especially because their inflation data showed a slight uptick, and they don't want to be in a situation where they're fighting inflation again. Which is why they're kind of like wanting to hold, which is fair point as well after 6 consecutive cuts.
The noise in inflation, for instance, is an issue for most central banks at the moment, but you can kind of hear that being reflected by the RBNZ, but also the RBA in the way that they sort of, kind of suggested we need to be waiting for the quarterly numbers.
Yes, for RBA, the situation is a bit tricky, and that's true for RBNZ as well, because these are the two countries that don't get full monthly inflation report, right? The one that RBA gets is a partial gauge. So, for example, the January data would have goods, the February data would have more services, and then the March data would have some goods and services. So individually, they do not provide a comprehensive guide of what prices are doing, which is why the RBA is less inclined to rely on that monthly report. And markets don't seem to want to wait. They look at the monthly indicator and they react. And RBNZ is in a similar situation. In fact, RBNZ gets employment report with quite a lag as well, because theirs is quarterly. So the question, I guess, is, do you want to wait for data to react, or do you want to look at some timely indicators, some other kind of, read the tea leaves and respond before it's too late because the data do come with lag. So that's the question I guess they are grappling with.
Hopefully we get more communication. Bloomberg's buddy Andy there, and markets never want to wait, do they? But let's take a look at how we're tracking when it comes to trading in benchmark markets, given the sort of turnaround in tone on trade from President Trump overnight with these announcements over 50% tariffs on copper imports and potentially 200% when it comes to pharmaceuticals, with not much of a grace period for those relocation of manufacturing facilities either. But we are seeing a little bit of sort of muted trading to the upside when it comes to what we're seeing in Korea in particular, about 0.3% higher. The Nikkei 225 pretty cautious, trading flat at the moment. We're seeing downside for trading in Australia after that shock hold instead of the expected cut from the RBA previously. That sent into a big move when it comes to Aussie bond yields, as well as some strength in the currency as well. We've also been watching a move when it comes to both trading and copper futures pricing in London, as well as the copper names, the stocks that have been trading in Asia as well. More ahead here on the Asia Trade. This is Bloomberg.
The Techcombank Investment Summit begins in Hanoi today, bringing together policymakers, business leaders, and investors. Let's cross over to the event where Insight anchor Hazinda Amin is standing by. And Hazinda, you're in one of the very few countries, a handful, that have actually gotten a trade deal with the United States. There must be a big sigh of relief as we continue to see uncertainty around the world.
Pretty relative, I must say. Yes, it has a deal with the U.S., but, you know, it's still 20%. 20% tariffs from the U.S., down from 46% initially. In comparison to the rest of the region, that's pretty good, Shery. Take a look at the likes of Indonesia, Malaysia, Laos. They're seeing tariffs in excess of, 25 to 40%. So 20% ain't too bad. But when you speak to some of the experts, economists on Vietnam, they say that even a 20% tariff would mean a reduction of about 2.5% in terms of its GDP growth. So that is quite a challenge. Remember, this is one of the fastest growing economy in Southeast Asia, if not the fastest. It has a target growth of about 8%, but with a 20% tariff, that is going to be pretty complicated. As recent as April this year, the government said that projection was still intact. Now, remember why Trump wants to impose that 20% tariffs? It is because of the trade surplus in excess of $120 billion. That trade gap, the third largest behind only China, as well as another country that escapes me right now. But it is third in terms of the largest trade gap. But some in Vietnam say that it is a result of, you know, the U.S.'s own actions. Remember, during the Trump administration, term 1, it had imposed tariffs on China, and as a result, factories around the world moved away from China into Vietnam, and that includes the likes of Lululemon, Nike, and that is contributing, in fact, to the surplus that is seeing right now. So some sense of unfairness, perhaps, murmurings happening in this part of the world.
You've got some great guests lined up at the event too.
Well, that's right. We're trying to get the pulse check from some of the biggest companies operating in Vietnam. We're speaking to Techcombank CEO himself to talk about, you know, how he sees the trade tariffs will impact lending, will impact sentiment in the country, will impact investment appetite as well. We're also speaking to the U.S. ASEAN Business Council President and CEO, Ambassador Ted Osius. We want to get his take on how the rest of the region will cope and how they should be navigating all the tariffs that will be taking effect in this part of the world. We're seeing some of the highest tariff rates so far, up to 40%. That would be detrimental to the region. Haidi.
Was a trade surplus country South Korea? Because I remember they had a record surplus against the U.S. last year, but I'm not quite sure if you were thinking of that country, Hazinda.
Well, that's right. I mean, it's tough when you take a look at the surplus, right? It is.
Yes. Let's leave it there. I mean, the lag right now, technically not great, but I'm joining us from Hanoi, of course, with those big conversations coming up. We have other stories we're following. Brazilian President Lula da Silva is aiming to deepen trade ties with fellow BRICS members, India. During a state visit to Brasilia with Indian Prime Minister Narendra Modi, Lula said he wants to triple trade flows with the South Asian nation from $12 billion last year. Brazil has been pushing to diversify its trade partners as U.S. tariffs upend global commerce. President Trump says he's considering whether to take control of the city of Washington, D.C. to help combat crime. Speaking during a cabinet meeting, Trump said his chief of staff is in contact with Washington's mayor. He didn't give any details on what he meant by the White House running the city. City residents have elected their own local government since 1973, but Congress also reviews local laws and budgets. The U.S. Supreme Court has allowed President Trump to move ahead with plans to dramatically reduce the size of the federal government. The justices lifted a court order that had blocked 19 federal departments and agencies from slashing their workforces. They argued that the administration is likely to succeed in arguing that Trump's executive order and joint memo were lawful. A new report from the Dallas Fed shows President Trump's crackdown on immigration and ramped up deportations will cut U.S. growth by almost a full percentage point this year. The researchers found the biggest hit would be to GDP growth, mostly due to fewer border crossings along with a slight increase in inflation. A mass deportation scenario could also see GDP 1.5 percentage points lower by the end of 2027. We have more ahead. This is Bloomberg.
The latest from the corporate front now, and longtime Apple Chief Operating Officer Jeff Williams is stepping down late this month, marking a major changing of the guard for the iPhone maker. Apple says he'll hand his post to Deputy Sabi Khan before retiring from the company later this year. Apple's design team will report directly to CEO Tim Cook after Williams departs. Bloomberg has learned that SpaceX is discussing plans to raise money and sell insider shares in a deal that would value it at around $400 billion. That would mark the largest ever valuation for a privately held U.S. firm. Sources say the valuation reflects the rise of its Starlink satellite internet unit and the company's ability to achieve new milestones with its Starship rocket program. Bloomberg has learned that Starbucks has received proposals from investors interested in its China business, with most seeking a controlling stake to exert greater control. Sources say Starbucks is shortlisting potential investors for the next round of bidding. While the company prefers to sell a minority stake, it may now consider selling a larger holding. Boeing says it delivered 60 aircraft in June, its best showing in 18 months, reflecting factory improvements and the resumption of exports to China. The surge puts Boeing back on even footing with rival Airbus, which delivered 63 jets last month. Boeing has been hit by a series of crises, but momentum has shifted, with Airbus now struggling to hit its production targets. Shery.
Haidi, Chinese companies are lining up in droves to list in Hong Kong this year, awakening the city's market from a years-long lull. 6 companies are making their HKX debuts later today. Shares of Apple supplier Lens Technology already rising as much as 9% in gray market trading. And the biggest of those IPOs was, as I mentioned, Lens Technology, raising over $600 million. Let's get more on that debut with Asia Equity Capital Markets reporter Julia Fioretti joining us now from Hong Kong. So, Julia, what's driving all this activity in the city?
Well, we've seen a real resurgence in Hong Kong deals this year, and that's partly driven by the fact that investors have now turned more positive on China after years of shying away because of concerns about the economy and regulatory clampdowns. But this year, with the emergence of DeepSeek in January, which stoked hopes about China's AI ambitions and its AI capabilities, that's really fueled a rise in the markets. The Hang Seng has risen to 20% this year, which makes it one of the world's best performing outperforming major indexes. So all of this has really driven the listing activity that we're seeing, and companies listed in mainland China are coming to list in Hong Kong because onshore markets remain closed for fundraising, but there's a lot of regulatory support for listing in Hong Kong and raising funds there, which can then help them get funds offshore that they can use for overseas expansion. And investors have really been lapping up many of these deals.
Do we expect that momentum to continue?
Unless we see a black swan event, and obviously there's a lot of uncertainty still with geopolitics and trade, yes, we do. The pipeline is really bulging, and there are about 200 companies which have filed, or more than 200 companies which have filed already for Hong Kong IPOs. So there's really a real backlog of companies looking to go public. We're seeing companies that had tried to IPO in the previous years now finally and failed, now finally being able to come to market. So it's showing that the markets are open, and the expectations are that this will continue, barring any unexpected upsets in the markets.
Bloomberg's Asia Equity Capital Markets reporter Julia Ferretti there. And as we head towards in the next half an hour or so of trading across Greater China, we're also looking at a bit of downside when it comes to US futures here at the moment, just lagging as we see that sort of shift in tone, the commentary when it comes to the copper as well as the levies over pharmaceuticals also being threatened at around 200% according to President Trump. We are seeing that impact when it comes to risk settlement so far in this session. The picture when it comes to Greater China as we get into the start of trading, A50 FTSE China futures are looking flat at the moment. We're seeing a bit of downside when it comes to trading in Taiwan futures. We're getting China inflation numbers out today as well. That's expected to show some pretty sticky price pressures for the month of June. Consumer prices likely to be stuck in deflation for a fifth month in the month. So really showing that deflationary pressure when it comes to the sluggish consumption picture there in China, Shery.
And that will have really implications for metals demand, commodities demand right across the world. So take a look at how copper is trading at the moment, because we are seeing some pressure when it comes to the London market. And this after copper prices actually surged to record highs in the U.S. New York trading session. We're seeing perhaps a little bit of dislocation in the market given the significant U.S. premiums. Traders have been shipping record volumes of copper into the U.S. in recent months. Of course, they're trying to front run any possible implementation of tariffs. And we finally have President Trump talking about 50% tariffs on copper. Of course, big implications for some of those copper exporters like Chile. So we have seen also the ripple effects in the Chilean peso, in the Peruvian sol as well. So do watch out for the emerging markets complex as well. As you can see right there, the industrial metals index on the Bloomberg rising 5% at the close in the overnight session. But in the Asian session, we're seeing a little bit of pressure on copper prices at the moment, Haidi. So we'll keep you updated on the latest on those trade negotiations and what happens with metals tariffs. But that's it from the Asia trade. Our markets coverage continues. The China show is next. This is Bloomberg.